It's time for today's three-stock lunch. Our trader is Brian Vendig of MJP Wealth Advisors. Brian, welcome. First up today, Adobe shares soaring, posting their biggest gain in more than 4 years on better than expected results. There's an AI angle here, of course. Brian, with the shares up nearly 15% now, are you a buyer here?
Hi, Kelly. Yes, actually, I was really encouraged by the earnings report that came out recently and talking about second half demand and subscriber growth potentially improving due to, as you said, the AI improvements in software adoption. And so, look, the stock's been down 23% through last night's close. And with hearing that here's a company that is looking at an annuity stream with its business with subscriptions as an alternative to that AI story, which is, as we know, has been primarily chips and servers. I like that, right now, based on what the company's been saying and what their outlook is for the balance of the year.
All right, sticking with it.
All right, let's move on to Caterpillar. Broader weakness in industrials. Caterpillar helping to lead the Dow's losses today. Your trade on the big cat.
Well, on the big cat, Tyler, you got to be diversified. And I think this is a great name when thinking about what can happen with the global economy from a cyclical perspective. I mean, fundamentally, the company has been sound, very affordable on a forward price to earnings ratio of around 15, and talking about a stable business in light of a slower growing economy. And I think if you believe in the thesis of interest rates declining as inflation declines as we move into the balance of this year into next year, Caterpillar definitely can get a boost from lower rates being in a capitally intense business. And also the fact we still have another almost decade in front of us of infrastructure spending with China stabilizing. At these valuations, that's something that looks attractive to me.
All right. Caterpillar. Let's move along to Hasbro shares then, which are higher today on an upgrade from Bank of America. They're talking about expectations of an earnings rebound. Oh, yes, from its digital gaming strategy. Let's talk Hasbro. Would you buy the stock here?
Well, Kelly, I would say let's take our money and run when we pass go, so to speak. A little Monopoly reference there. I think today's bounce really came from an analyst upgrade, to be honest with you, not necessarily durability from the fundamentals of the company. I mean, just a couple months ago, the company was talking about sales being at risk of decline or not growing as much as expectation. Plus, we know that this type of business is sensitive to consumer spending. And in light of some of the macroeconomic things going on, when consumers have shown to be sensitive on price and maybe in the short term, a little bit more sensitive this year than last year, I got to say Hasbro being in the consumer product space might be sensitive to those demand shifts. So I would, again, put a sell on this one. Let's take our money and run as we pass go and see how things play out for the company over the balance of the year.